Hi guys. Um, for this video, we are going to do test one, and please don't mind my question paper. It is untidy. That is because while I was writing the paper, I answered some few questions on the question paper first before I transferred them to my answer sheet. So yeah, but some answers are not correct, so just pay attention. Now let me just get my pen so we can start. Okay, so now question number one is saying, what does the production possibility frontier represents? So remember, this is the production possibility frontier. It's this thing, which is like this. And it's basically represents, okay, let's just say this is good X and this is good Y, right? So it basically represents the combination of two goods, good X and good Y's, that can be produced or that are attainable when our resources are used fully and efficiently, right? So now let's try to get the correct answer here. So they're saying that number A, the maximum output that can be achieved with the available resources. Okay, so this could be the answer. Let's just do this. The cost of producing one good over another, no, doesn't represent the cost. We're just looking at two combination of good that can be achieved, right? Given that our resources are used fully and efficiently. The economic growth, no. The allocation of goods in the market, no. So the correct answer is what? Is A. The maximum output that can be achieved with the available resources. Right, let's move on. So number two is saying, okay, why does my thing, it does not want to move? Okay, number two is saying, which of the following best describes the main challenge in economics? So what is the main challenge in economics? In economics, we call it the central economic problem. So in economics, the central economic problem that we are basically studying is is the issue of scarcity, right? The fact that we have so many needs and wants which are unlimited, but we have limited resources um or scarce resources to actually satisfy those needs and wants, right? So now let's try to find the correct answer. So remember, the challenge is the scarcity, right? Scarcity, having limited resources. So they're saying here, A, unlimited wants, unlimited resources. This could be true because we have unlimited wants, but we have what? Limited resources, right? Meaning that we have scarce resources. So we're just going to put a dash here. Equal distribution of resources. No, this is not the main challenge. Unlimited resources and limited wants. So our wants are not limited, they are unlimited. And unlimited resources, we have limited resources, right? So this one is wrong. Scarcity of resources, but no want. Obviously, we have scarce resources, but we do have wants. We have many needs and wants. So the correct answer here is also A, right? Okay, now let's move on. I feel like you guys are gonna be bored when you do this one. Okay, I just can't wait to get to the calculations then. Okay, number three, they're saying which of the following is not one of the four factors of production? So remember that our four factors of production that we have land, labor, capital, and entrepreneurship, right? So let's look here. Labor, yeah, labor is a factor of production. We want to the one which is not. Okay, so labor, it is a labor factor of production. B, capital is a factor of production. Profit, no. Profit is not a factor of production, but profit is a source of do you call it a source of income? Because for I guess we have sources of production, which is land, labor, capital, entrepreneurship. And then these factors of production, they earn what? Income. So for labor, they get what? They get a salary or wage. For capital, they get what? They get interest. For land, they get what? They get rent. And For entrepreneurship, they get what? A profit. So this is not a factor of production, but also a source of what? Of income, which is the remuneration which an entrepreneur gets, right? So let's continue. Why doesn't my cursor don't want to move? Okay, let me just go here. Number 4, they're saying capital as a factor of production refers to. Okay, so you know that our factor of production is land, labor, capital, and entrepreneurship, and capital earns interest, right? So as a factor of production, we refer to, so capital is basically in economics, because we have different types of capital. We have financial capital, we have human capital, and so on. But in economics, when we speak of capital, we're basically referring to the machinery, right, and the equipment which are used in the manufacturing process, right, to manufacture in the production process, I mean, to manufacture goods and services, right? So that is the type of capital that we refer to in economics. So now let us try to find the correct answer here. So they're saying that as a factor of production, capital we refer to money, no. If it was financial capital, yeah, but we don't look at that here. We're just focusing on capital being one of the input used in the production process, right? Used to invest in. So this one is wrong. Number B, natural resources. Natural resource is wrong, J. Used in the production. Natural resources would be land. Tools, yes. Machinery, yes. Equipment, yes. Using the production process. So the correct answer is C. So this question paper is boring because the answers are already here, but not all of them, guys. We are going to find questions where now my answers are wrong. We just like here. Okay, so the answer here is C, right? Because capital, I did say within in economics, we're just looking at capital being one of the input using the factor of production, and we're now we're saying with capital is basically the machinery, the equipment which are used to manufacture our goods and services, right? So the correct answer here is C. Okay, let's continue. Number 5, the pure market economy. So remember now that in economics, we have the central economic problem, which is scarcity, right? So the central economic problem is scarcity. We're dealing with scarcity. And then now we have the economic systems which now answer, which provide solution to these economic problem of scarcity by answering the central economic questions of what to produce, how to produce, and for whom. And those economic systems are called pure market economy, mixed economy, and free market economy, right? So now the question is saying here, sorry, in a pure market economy, decisions are made by, so in a pure market economy, or you can also call it the free market economy. So in that economy, the people that make decisions are basically the individuals and firms, because in a pure market economy or a free market economy, um, or a free market economy, that is where we say that all resources are privately owned by individuals, right? So the answer here, we need to look, they're saying that decisions are made by, so we know that here, because all resources are owned by all resources are privately owned by individuals and firm. So we just have to look who makes that decision. Obviously, because they own the resources, they are the ones who make the decisions, right? The individuals, the household. So obviously, the answer is also a giveaway now because I've explained. So the first one is the government. So the government will not be will not make decisions here in a pure market economy. The government will make decision in the command, or you call it the command, or you call it the what? Centrally planned economy. And also the government, or the government. Centrally planning committees, no. And then individuals, household, and firms, yes, right? Because all resources in a pure market economy or in a free market economy, they are owned by individuals. So obviously, they are the ones who are going to make the decisions. Then question 6 is saying that in a mixed economy, excuse me, the primary purpose of the government spending is to. So you know that in the mixed economy now, that is where you have the centrally planned, it's a mixture um of the centrally planned economy as well as the pure market economy, which basically means it's the mixture of the centrally planned economy as well as the freer market economy. So in the centrally planned economy, you know that all resources are owned by the government, and in the free market economy, you know that the resources are owned by are privately owned by individuals, right? So in the mixed economy now we have a mixture of the government as well as individuals, right? So government provide for our wants and sorry for our needs, and the individuals they are there to provide for us. For the markets they are there to provide for us for our wants in the mixed economy. Right. So they're saying here the primary purpose of the government spending is to in the mixed economy. So the number A, they're saying that to maximize business profits. No, the government is there to actually provide for for our needs, and the market is there to provide for our wants. Right. Since South Africa basically is an example of a mixture of the because is an example of a mixed economy because there's a mixture of the free market as well as the centrally planned, right? Meaning that the government owns most of the resources in the mixed economy, and then the markets or the individuals are also there to provide or to take care of the people's wants, right? And the government is there to provide for our needs, and in a form of government providing us with the public goods, you know. So the primary purpose of the government spending is to maximize business profits, no, to redistribute income and provide public goods. Yes, this one will be true because government is there to do what? To provide public goods and redistribute income. Obviously, distributing income in a form of providing transfer payments and and social security benefits. Yeah. So let me just continue with number C. They say number C, reduce inflation permanently. No, inflation can never be reduced permanently. Like inflation does not exist at all. I don't think so. So C is totally wrong. Eliminate the need for private firms. Eliminating the need for private firms. I don't think so because this one is wrong because in the mixed economy, and as I mentioned, also there's the government is providing for our needs in a form of providing us with the public goods, and then the private individuals or the firms they are there to provide for our wants. So we do need these firms also in the mixed economy. And remember, one of the disadvantage in the mixed economy is that we have citizens have to pay tax. So for them to pay tax to the government, we have to have these firms like private firms. So this one is also not correct. So the answer here is B, right? In the mixed economy, the primary purpose of the government spending is to redistribute income in a form of providing a social security, such as a grant, your pension fund, your pension, and also providing a public goods such as schools, hospital, and so on. Okay. A traditional economy. So remember, traditional economy is basically like mostly found in the rural areas or in the underdeveloped countries, and that is basically where now they still do those they still practice hunting, gathering, and farming in the traditional economy. And their their main aim is not to stimulate economic activities, right? By doing whatever they do, by farming, by hunting, by gathering. So they're saying here a traditional economy is typically characterized by advanced technology and innovation, definitely no, because one of the characteristics of a traditional economy is that they are rigid and they are slow to adapt to innovation and as well as um change. because they still rely on traditions and norms, right? So advanced technology and innovation will definitely be wrong. And then government regulation to all industries. Okay, so in a traditional economy, there's no government regulation. There's no government intervention at all. So this one will also not be correct. Number B. Economic decisions based on custom, beliefs, and rituals. So this one is correct. Number C. So in a traditional economy, it's traditional, guys. Whatever they do is just what they were doing in the past. They're not really changing as much or innovating, as they still do what they farm, they hunt, and they gather. They do gathering. That is basically what they do in the traditional economy. So the correct answer is C. Okay, let me just read D. Free market competition and consumer choice. Free market competition and consumer choice. Okay, but the most correct answer is C. Question 8. Let me just get this. We can have okay here, this part. So question 8 is saying that in a circular flow model that includes the foreign sector and the financial markets. Okay, so this is a circular flow model that includes the foreign sector and the financial markets. Okay, then they're saying that which of the following statement is correct? So you need to remember that the circular flow basically shows the flow of income, spending. Let me just try to write here. It's the flow of income, and then it's spending, as well as production, right? So the circular flow is basically shows the flow of what? Income, spending, as well as production. Remember from, I think I did this on one of the videos where I was explaining that in a circular flow, you have these participants, which are your household. You have 4 participants. You have your household, you have your firms. Okay, I'm not going to write it. Let me just say it. You have your household, you have your firms, you have, so it's households, you have your firms, you have your factor market, and then you have your product market, remember? And then all these participants are interacting with each other. One is spending, one is producing, and so on. And one is receiving income from the other, right? So do I have to write it down? I don't think so, because I think there is a question like that. I think there is a question. So let's just focus on this one. So they're saying that in a circular flow model, the foreign sector and the financial market. Okay, so there's also now the foreign sector and the financial markets. So the foreign sector, it basically deals with providing our households and firms with our export, right? So our imports, I mean. So the firms or the households will buy from the foreign sector, your Shein, your Temu, right? And also um the households will also sell to the foreign sector, right, in a form of export, right? So they import, the foreign sector provides households with goods and services, which is import, and also the firms also provide the foreign sector with goods and services, which is an export. So when goods leave our economy from the firms to the foreign sector in a form of being exports, that is an injection in the economy, because those goods, if they, so I'm just gonna put F here for a firm. So if a firm now delivers goods to the foreign sector, right, which is called exports, the foreign sector would have to pay for these goods, right, to the firm, right? So export then become what? An injection in the economy, because for these exports, we're receiving money, right? Money is coming in from foreign sector to the firms. It's an injection in the economy. Also now, when, let's say now the households, I'm just gonna put H here for households. Let's say now the households are doing what? They are purchasing goods and services from Shen, right? From the foreign sector. So goods are going to the what? To the households now. These are goods. The households are going to do what? Are going to pay for these goods. These goods are called imports, right, in our economy. So the households will pay for these goods, and that would be what? That would be a leakage in the economy because money is leaving our economy. It's going where? To the foreign sector. Yeah, group China to Shin. So, and then the financial markets. So the households and the firms, they save in the financial market, right? And also the financial market provides investment to what? To the firms, right? So what are they saying here? In a circular flow model that includes the foreign sector and the financial market, which of the following statement is correct? Okay, now let us read. The foreign sector only provides imports and does not receive exports. So the foreign sector only provides imports. This is not correct, guys. Remember, I just made an example. We saw that in my example, the households did what? Um, they purchased from the foreign sector, right? And import, and then the imports were moving from the foreign sector to the households, and the households were paying for the imports. Then the firms also the the foreign sector purchased from the firms, and then now the goods were moving from the firms to the foreign sector, and the foreign sector was paying for those goods and services, for those exports. So now they're saying that the foreign sector only provides imports and does not receive exports, which is not correct because they provide imports to the households, that is true, but they also receive exports from who? From other firms. So this one is not correct. And then B saying that the financial market facilitates savings from households and investment by firms. So this is true. Remember, I said that in the financial markets, the households and the firm, they save their money with the financial markets. And also the financial market provide investment towards to the firms, right? So this one is correct. But let's just read the other ones to see. Exports are considered leakages. Yes, because remember when firms, no, exports are not leakages, they're injection. Remember, I said that the firms will provide exports to the foreign sector, goods to the foreign sector, and the foreign sector will pay for these exports. So it's an injection in the economy because you're receiving money. So this is an injection. Already, this one is wrong, okay? But and they're saying that imports are an injection. So imports will be a leakage because now that is where now the households are actually now purchasing from the foreign sector. So when the households are purchasing from the foreign sector, so these are the households. Okay, I'm just repeating this. So when the households are purchasing from the foreign sector, the goods go from the foreign sector to the households, right? And the households need to do what? To pay money to the foreign sector. So money is leaving our economy, is going where? To the foreign sector. So this one will be a leakage. Imports will be what? A leakage. So number C is also not correct. And then number households interact directly with the foreign sector to how to pay tax. This one, guys, is not correct. You can also see households, why will households pay tax to the foreign sector? Because they pay tax to the government. Okay, question 9. Which of the following is an example of a leakage in the circular flow of income? So leakages, I differentiate, so okay, I use jigs and stem to differentiate between the leakages and the injection, right? So let me just write it here. But if you did watch the previous video, you will know this jigs and STEM. Okay, I wrote STEM there. So G for government expenditure, I for investment, and X for export, S for savings, T for taxation, and M for import. But in economics, import is denoted by Z, right? I just use M because, STEM jigs. It's easy to remember that. But in economics, imports are denoted by Z. Right. And you know that your imports, so if you don't know what S is a whether S is a leakage or an injection, whether T is a leakage or an injection, or whether G is a leakage or an injection, or whether I is a leakage or an injection, you can just cram by knowing X and M, right? Because this is what that is what I also do. So X is for export, right? So exports, remember from the previous question that we did, we said Uguti, from the foreign sector, our firms they sell goods and services to the foreign sector, which are exports, right? They export goods to what to the foreign sector, right? And exports, we said these are what? We said exports are then because if we sell these goods to the foreign sector, we receive income. So exports are injections, right? So now you know that JIX is what? Is for injection, right? So this one is for what? Is for I. I for what? For injection, right? So obviously your stem would be what? A leakage because you're just gonna cram with M. So M is for import, right? But remember, in economics for imports, we denote it by Z. But imports, these are what? These are goods that are coming into the economy, right? Because we are purchasing them. And to get these goods, to acquire these goods, we have to pay money, right? So money is leaving the economy, which is a leakage. So stem then becomes what? I'm gonna say L, a leakage. So what is this question saying now? They're saying which of the following is an example of a leakage in the circular flow of income, right? So household spending, um, okay, income. So the household spending is basically an injection in the economy because now if the households are spending, they're injecting money in the economy. So this will not be a leakage. Income on goods and services produced by firms. So when firms are earning income for goods that they've produced, I think this is also an injection in the economy, right? And then so number A is not the answer. And then let's look at number B, firms hiring workers from household and paying wages. So they're paying them these wages. They're going to use these wages to consume goods and services in the economy. I think this is an injection in the economy. So B is also an injection. Individuals saving a portion of their income in the bank. So I'm not sure about this one, but because I see saving, I'm going to think of jigs and stem. So, where is S? S is here with steam. So this one is a leakage, and the question wants me to identify leakages. So the correct answer here, I think, okay, so far, I think the correct answer is C. Obviously, Vele, when we're saving money in the economy, it's like withdrawals. It's like a leakage because we're taking money from the economy. We are going to save it there at the financial sector. So money is just there in the financial sector. It's not being used. So it's a leakage in the economy. It's a withdrawal in the economy. Savings are what are leakages. So C might be the correct answer, but let's just look at D. Government collecting taxes and using them for public goods and services. This is definitely an injection in the economy because now God is providing us with the public goods and services. So the correct answer for question 9 is also C. Right. Okay, let's continue. For this one, it's very important to remember jigs and stem. So question 10. Which of the following correctly distinguishes between the goods market and the factor market? Okay, so in the goods markets, that is basically the market of consumer goods and services. That is where we purchase the goods and services that we're going to use for consumption, right? And then the factor market, we know that the factor market is the one which hires our factors of production, right? To use them in order to, no, the factor market is just hires the factors of production and then it sells our factors of production to the what? To the firms. And the firms are going to use the factors of production to produce goods and services, right? So they're saying here we have to distinguish between the goods market and the factor market. Okay. So in a goods market, business purchase resources such as labor, and capital. Okay, this one is not correct because I remember I said in the goods market, this is where they sell our consumer goods and services that we purchase. So now they're saying that the business they purchase resources such as labor, land, and capital. Okay, let me just continue. While in the factor market, households buy finished. I know this one is not correct. In the factor market, we don't buy finished. goods and services. Finished goods and services are in the goods market. So the A is not correct. Number B, the goods market involves the exchange of finished goods and services between households and firms. Yes, while the factor market involves the exchange of factors of production between households and firms. Okay, so this one might be the correct answer because remember in the goods market, that is where now the households, they buy finished goods and services. And then in the factor market, that is where now the households, they sell their factors of production. But number C is saying the goods market involves the exchange of no, not financial assets, while the factor market deals with the raw material. I don't know if you call factors of production the raw material. So I'm gonna say this is not correct. The goods market is solely concerned with the exchange of agricultural product, not necessarily agricultural product only, right? While the factor market involves capital good. It does involve capital good, but also um because it's machinery, but also labor, land, and capital, I think. So it involves capital good. Machinery is a capital good, and it's a factor of production. But D is also not the correct answer because of this one, and also this one is not complete when they say that factor market only involves capital good. So the correct answer here is B, right? Because in the goods markets, that is where now we purchase finished goods and services which we are going to use for consumption as households and in the goods market and in the factor market that is basically where now as households we sell our factors of production to the factor market so that the factor market so that they they can also sell these factors of production to the firms and the firms can use these factors of production in the production process, right, to produce some more goods and services. Okay, so we're done with that one. So now we go to, so the correct answer here is C, right? Okay, I just wanted to, no, it's B. Okay, so question one, define the following, the following. Okay, define the following economic terms. Scarcity. Okay, so guys, already you know that scarcity is the central economic problem because we're dealing with scarcity. Scarcity is basically a situation where now we do not have enough resources to satisfy our basic needs and wants, right? You can basically explain this, but in any way that you want to explain it, but you have to show that it's where now we do not have enough resources or we have um inefficient resources to actually satisfy our need and want, right? So this is basically defined as having limited resources because we use this word interchangeably. We can say scarce resources or limited resources. So it's basically a situation where we have limited resources and we are unable to satisfy our unlimited needs and wants. So capital, I've already explained this one. So in economics, we have capital, something called capital, and it refers to basically machinery and equipment, right? So when you see capital, don't think of accounting capital. Remember, in accounting, we also have capital. No, which is basically the owner's contribution, right? No, but here in economics, when you're speaking of capital, we're just referring to the machinery and the equipment which is used in the production process. You can just explain also this one in whatever way you can, but you have to show that it basically now refers to the one of the factor of production. First of all, capital is one of the factor of production, and it's basically used in the production process to manufacture or to produce goods and services. Then you can give an example to say capital good is e.g. machinery or I don't know, but just show that capital good is basically the machinery or the equipment which are used in the production process to manufacture and produce goods and services, right? And then consumption. So consumption is basically refers to the utilization of economic goods and services by households, right? So when a household or when consumers they purchase goods and services. They're purchasing those goods and services for what? For consumption. So it's basically now consumption, then it refers to the utilization of economic goods and services by households, right? That is consumption. So guys, the definition here, it basically depends on how you understand these terms. And then question 2, economic systems are used to determine how resources are allocated and economic decisions are made in a society. Okay, let me just read that again. Economic systems are used to determine how resources are allocated and economic decisions are made in the economy. Okay, remember we said economic systems, they answer the questions of what to produce, how to produce, and for whom. There are three main types of economic systems. We have the command, the market, and the mixed economy. Okay. And then explain one advantage and one disadvantage of each economic system. Excuse me. So we're going to start with the command. So remember the command we said that is where now all the resources are owned by what? By the government, right? In the command system, all resources are owned by the government. And the advantage of that is that there's guarantee equal standard of living, right? Because the government actually provides public goods and services equally to provides public goods and services equally to everyone, right? To ensure that it meets every person's needs and wants. Right. So in the command system, there is what guarantee equal standard of living because of that. Because the government is the one who's providing them public goods and services equally to meet the needs and the wants of the individuals. Right. The command. All resources are owned by the government. And then, or you can say it's the command or the centrally planned. And then the disadvantage with the command is that there's okay, I can't pronounce this word properly, but it's bureaucracy, meaning that there are so many rules and laws which have to be followed. And it's also corruption. There are also other disadvantages on your textbook, but yeah, I just know these two, which is corruption and bureaucracy. Right. Obviously, guys, you know that things that are owned by the government, there's always corruption happening there, right? So I don't think you should forget that one, the fact that there's corruption in the command system, right? And then the market system or the free market, um, the free market is also called the capitalist. Excuse me. So in the market, we said that is where now resources are privately owned by individuals, right? So resources are privately owned by individuals. And these markets, they are profit driven, right? The individuals, their main aim is to make a profit. So the advantages is that there are incentives for producing better products. So if this person produces a better product than their competitor, then there's an incentive because they are going to get more customers, right? So that is an advantage. And the disadvantage in the market system is that they do not provide public goods and services because their main aim is to make a profit, right? The main aim is to make a profit, so they do not provide public goods and services. So their goods that they provide has a purchasing power attached to it, right? So yeah, so these two are the opposites of each other, the command and the market. You will notice that I use the same advantages and the disadvantages. It's just that here I said that in the command, I said that there's guarantee equal standard of living because the government provides public goods, which is an advantage. But this side, it is a disadvantage because in the market, they do not provide public goods because their main aim is to make a profit, right? And on the command, I say that there's corruption and bureaucracy, many rules and laws which have to be followed. While in the market economy, there is an incentive to produce better products, right? If you're producing a better product than your competitor, then you have an incentive there because you're going to add more revenue, obviously. And then the mixed economy. In the mixed economy, that is basically now the combination of the market and the command, right? In the mixed economy, that is where we say the government provides, takes care of our needs and the market takes care of our wants, right? So the advantage in the mixed economy is that there is a balance of needs and wants because the government takes care of all our needs and the market takes care of all our wants. So there's a balance of the needs and the wants within the economy, in the mixed economy, right? And then in the mixed economy system. And then for for the disadvantage is basically that in the mixed we have to pay tax, right? We have to pay tax to the government. So that is the disadvantage. There are also other disadvantages in the mix, such as monopolies and a rising of monopolies and what else and so on. But I just prefer this one. That here they pay tax. Explain one advantage and one disadvantage of which, okay, we already done that. They just need one. Distinguish between stocks and flows in the and provide one example for each. So the stocks, we know that for stocks, they are measured at a particular point in time, right? Stocks are measured at a particular point in time. And the example of stock, it's wealth and capital. One of the example I saw is but money in your bank account. Yeah. And then for flows, they are measured over a period of time, right? And this is the your monthly salary or profit or loss and so on. Oh, sorry. Those are what your flows. So I remember when I was writing this test, I said this one, no time dimension, this one, time dimension. And the lecturer said we shouldn't use that. We should actually use the um to distinguish, we should also use the fact that these ones they are measured at a particular point in time, and these ones they are measured over a period of time. I don't know why, because that is on our slide, but yeah. So stocks they are measured at a particular point in time. Your example is wealth, your money in your bank account, and so on. And then the flows they're measured over a period of time. For example, your monthly salary and so on. Profit and loss differentiates between households and firms and their respective roles in the circular flow of income and spending. So you know that the households, oh, first thing, Jay, is that households are the owners of the factors of production, right? Shouldn't forget that. And then the households are the owners of the factors of production. They own land, labor, capital, entrepreneurship, and they provide their factors of production. Okay, it's just two marks. Okay, so they provide their factor of production towards the factor market, and then in return, the households they earn a remuneration for their factors of production, right? Or income for their factors of production. So labor earns let me just write them here. Okay, no, let me just say them. Your labor will earn a salary or wage. Land earns rent, capital earns interest, and entrepreneurship earns profits. And then firms. So the firms they purchase factors of production from the factor market to use the factors the factors of production in the production process in order to produce final goods and services. Right. Yeah, I think that is all with the firms. They just do that. And then they're going to sell obviously these goods and services. They're going to sell them where to the product market. In the given economic model, what does 3.3.1 and 3.2 represent? Okay, so this is the same as the one which I was explaining. So you can see here that we have the firms and we have the foreign sector. Remember, okay, so if the arrow is going like this, it basically means that the firms are doing something to the foreign sector, right? So we know that, okay, so we know that from the foreign sector, the firms will provide export to the foreign sector, right? And in exchange, the foreign sector will do what? Will pay the firms for what? For their exports. Right. So one person may write 3.3.1 represents exports of goods, or you may write that 3.3.1 represents the payment for what? For imports, because the firms, right, the firms will provide exports to the foreign sector, right? And in return, the foreign sector will pay for these for these exports, right? But also the firms, they also buy from the foreign sector, right? Which means the foreign sector will provide what? Will provide goods to the firms, which will be which will be imports, right? An injection in our in our economy. No, which will be a leakage in our economy because the firms will then have to pay for those imports. Ish, I don't know if I'm making sense. So let me just wrap this. So what I'm saying is that you see this arrow here. You can say these are exports of goods, right? Right. So 3.3.1 represents the export of goods from the firms to the foreign sector, meaning that the firms are selling these goods to the foreign sector, right? So if they are selling these goods to the foreign sector will pay for these goods, right? For these ones, which will be what? Which will be an injection in the economy, right? But also, this arrow can also represent something else. Remember, the firms, they also buy from the foreign sector, right? So the foreign sector can provide the firms with what? With the goods. Let me just write this G. No, let me just K, G, G. Okay, so the foreign sector can provide the firms with the goods, right? These goods are what? Are imports because the firms are actually receiving these goods from the foreign sector. So these are imports. Imports are what in the economy? They are a leakage in the economy, right? So for these imports, the firms would have to do what? Would have to pay the foreign sector for these imported goods and services. So this arrow again can represent what? The payment of what? Of the import, right? So you get it now. So this arrow can represent payment of imports, or it can represent the export of goods from the firms to the foreign sector. Ish, I hope you got that. But let me just explain this one as well, because it's going to be the same explanation. So here, with the foreign sector and the households, remember, the households, they do what? We as a household, because households are also called the consumers, so we purchase things from Shane, right? So we're purchasing things from Shane, and then Shane give us the goods that we've purchased, which is going to be what? Imports, right? These are imports because these are goods coming from the foreign sector into our economy, right? Also, this is a leakage in the economy. And we do what? As consumers, we pay for these what? We pay for these goods, right? For these imports which are coming in. So this also can represent what? This arrow here, it can represent um imports, which are goods which are coming in from the foreign sector towards to the households, right? Or it can also represent the payment of export, where now we're saying that the households, let me just use this arrow, the households now, they provide goods to the foreign sector, right? And then now the foreign sector does what? These goods are what? Are exports. Then the foreign sector pays the households for these goods, which is going to be what? Payment for export, right? Which is going to be an injection in the economy. Right. I hope I didn't confuse you guys. Hope I didn't confuse you. Also, because now the screen is so untidy, it's very difficult for me to focus. But I hope you're getting it. So this arrow can represent just exports because it's just goods leaving from going from the firms to the foreign sector. So these are what? These are exports, right? Obviously, if goods are leaving our economy, going outside, it's exports, and it's going to be an injection in the economy because the foreign sector will pay for these goods, right? And also now, if goods are moving from the foreign sector to the households, we say that is an injection because if goods, sorry, that is imports, which is a leakage in the economy because if goods are coming from the foreign sector to the households will pay for these goods, meaning that money will leave our economy. So that will be what? A leakage in the economy, right? So this arrow can represent just the import of goods. But this arrow can also represent the payment of exports, given that the households now was the one selling to the foreign sector. Right. So if we are selling to the foreign sector, those goods which are leaving our economy going to the foreign sector are called what? Exports. And the foreign sector now pays for these goods. So this arrow can also represent the payment of what? Of exports. Right. Same applies here. This arrow can just represent exports, meaning that goods are leaving from the firms to the foreign sector. So the foreign sector is purchasing our goods, which is what an export, which are exports, right? And exports are what an injection in the economy because the foreign sector is gonna pay for these goods. But also, this arrow can represent what? Can represent the payment of imports, where now we were the one purchasing, the firms, they were the one purchasing from the foreign sector, right? And now they were paying for these goods from the foreign sector that they purchased from the foreign sector, right? So this arrow here can also represent the payment of imports. I hope you got that. Let me just continue so that I don't confuse you guys any further. So question one, session C. Hey, this question, you. Okay, so they're saying that a small bakery produces cookies and cakes using the same resources. In a single day, the bakery can either bake 40 cookies or 20 cake. Assume the bakery decide to split its production time between cookies and cakes. For every 10 cakes baked, it reduces cookies production by 20 cookies. Based on the above scenario, answer the following questions. What is the opportunity cost of baking one cake in terms of cookies? So now you know that here they're telling us that for every 10 cakes baked, it reduces cookies production by 20 cookies. So meaning that to bake 10 cakes, the for every 10 cake which is baked, the opportunity cost is what? Is 20 cookies. So now they want us to calculate the opportunity cost of one cake. So basically gonna say the remember the formula to calculate opportunity cost is loss over gain. So it's basically 20 cookies divided by 10, which is 2, right? And what is important here, you also need to show the what's the formula, which is loss over gain. So I saw on the memo that they said 40 divided by 20. I don't know if it's 20 divided by 40, but they used that one. Mina, I just used this one and I got the correct answer and I got the full 2 marks, 2 over 2. So I just said 20 divided by 10 because they were telling us here that for every 10 cakes baked, it reduces its cookies production by 20 cookies, meaning that the 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 trade-off is 20 cookies to producing 10 cakes. So I just said 10, which is the loss divided by, sorry, 20 over 10, and I got 2. Now, I also have to show the formula, which is loss over gain, right? And then what is the opportunity cost for baking one cookie in terms of cakes? So now the you baking one cookie, meaning that you're foregoing cakes. So it's going to be the vice versa. So you just say 20 divided by 10, you get 0.5, right? Okay. And then let's continue. Use the information provided. Okay, let me just see why they said 20 over. if in a single day, the bakery either bakes 40 cookies or 20 cakes. So you either bake 40 cookies or 20 cakes. Say 40 over 20. Where's my calculator? Usually 14. 40 over 20, you get 2. Then if you say 20 over 40, you get 0.5. Okay, so this one still works. I just don't know why they use this one. So if you know why they divided by 40 over 20 and 20 over 40, you can just let us know on the comment section, right? Yeah, you can just let us know in the comment section. But then let me see. For every, okay, I'll do it on my own. Okay, now question 2. Use the information provided in the table below to graphically illustrate the production possibility frontier. Label each point on the graph with capital goods shown in the x-axis. Okay, so they want us to draw the production possibility frontier. So let me just get my pen. I'm still concerned with that question. I do not have space here. I'm just gonna use this one. I'm just gonna use this one. Yeah. So they want us to draw but you guys know how to draw the production possibility frontier, I'm sure. Okay, so they say that you label capital good shown on x-axis. So capital good, this one is going to be here on the x-axis, and then the consumer goods on the obviously on the y-axis here. So what I like to do when I draw the PP, if I just draw this thing first. Yo, yeah, guys, but I just draw this one and then now I plot. So if the capital goods are 0, 0 is here. The consumer goods are 6, so 6 would be here. And then if they're 8, capital goods are 8, so 8 will be here. The consumer goods are 5. Then I just try to make a straight line here, like that, like that, like that, like that. So it's going to be somewhere here. Okay, I should have I should have drawn my thingy. I should have shown it like this. Try and make it to like this. Yo, hi, obviously I was. But you guys see what I'm trying to do. So if you go up, 8 is here. So this is what 5. 5. And then if our capital goods is 14, so 14 is here. The consumer goods is what? It's 4. So you go up. This is where you meant. You can this one. Then I have 4. And so on. And then if there are 20 here, the capital good is 0. 0 is here. Okay, let me just do 18. 18 is here. And then the capital good is 3, so you just go up. Then your 3 is here. Right. And then you label this one is A. This is A, combination A. This is combination B. This is combination C and D. This is combination C. This is combination D. Then what is the opportunity cost of moving from point B to C? So they want the opportunity cost of moving from point B to C. So where's point B? Point B is here. To what? To C. Oh, just here. Point C is here. So you know the formula is loss over gain, right? It's loss. Okay, the formula is loss over gain, guys. So you're going to calculate here to find the difference. So if you say 14 minus 8, you see, okay, this is 6. and then 5 minus 4, it's 1. So for capital goods, you can see that they move from 8 to 14. So they increase the production of capital goods. And in order to increase the production of capital goods, they had to decrease the production of consumer goods from 5 to 4. So the loss is 1, right? So it's going to be 1 over 6 because the formula is loss over gain. So you say 1 over 6. You say 1 over 6, you're getting 0.16. So the opportunity cost of moving from point B to point C is 0.16. Don't forget to write the formula, guys. And then now they're saying that if the firm produces only capital goods by using all its resources, what is the maximum amount okay, what is the maximum amount they will produce? So let me just remove all of this. So if the firm now produces what? Um, Capital goods only. So if you can see here that if they're producing only capital goods, they produces how many? They produces 20 units, right? Because consumer good is 0, capital good will be 20, right? And this will be seen here on your PPF, it will be where it will be here. Where we said over here you have what 20 capital goods, and then you can see that you're not producing any consumer goods here when you're producing 20 capital goods. So did we answer the question? If a firm produces only capital goods by using all its resources, what is the maximum amount they will produce? Yeah, 20. In combination E. And then if new technology improves, let me just remove this. So now they're saying that if new technology improves the production of capital goods, how will the PPF curve shift and explain? Okay, so here you just have to explain, you don't have to write, but I'm just gonna draw it first to show you guys. So remember here on our x-axis, we have our capital goods, right? So we have something like this. And then if the technology for capital goods only increase, then our curve will shift like this, right? So it's going to shift to the right. We're here only on the axis, right? Yeah, you can just basically explain this how you want to explain it, but just also it's just one mark. So just show Guti, it's going to explain to the right on the x-axis, or you can say only the parts which involves the capital goods will increase. I don't know, but it's going to shift like this, guys, to the right on the x-axis. And then, so only if now only if they said only the consumer goods had the technology for producing consumer good had improved, it was going to shift like this. So it was going to shift upwards, right? You can see when I shift upward on the y-axis, right? If only technology for producing consumer goods, we're going to shift upward. But then also if they say now the technology for producing both consumer goods and producer goods, then it was going to shift outward like this, right? And number 3, they're saying that the local economy of okay, a small town in Limpopo has seen a number of tourist flocks to their local attractions since the end of COVID-19 pandemic. Over the course of the last financial year, its economic activities has increased dramatically, seeing a number of additional injections and leakages into and out of its circular flow. The table below provides the overview of the respective value of these these flows from 2024 to 2025 financial year. Okay, and then they give you the amount. So government spending from checks and steam. So remember, X here is telling us these are exports. Obviously, if they're exports, now it's what's an injection. So these are injections. M is what is imports. Imports are what are leakages, because to get these imports, we have to pay, right, for these imports. So it's a leakage in the economy. So now government expenditure is an injection, investment is an injection, savings, there's your S, it's a leakage, exports, it's this side, it's an injection, household spending, this is an injection. Household spending, guys, is an injection. Please don't write this. Don't be like me. So this one is an injection, right? Because households are spending their income way within the economy, right? So this one is an injection. And then taxes are what you come here, there's your T. Taxes are a leakage. So now then it becomes easy to do what? The calculations. So I think the only thing that would be a problem here, which will affect you from getting the correct answer, is because you don't know what is a leakage and what is an injection. So now because you know, then it would be easy if you get this question on the in the exam. Household, guys, household spending is an injection because households are spending their money here, right? We just assume that they're spending their money within the economy, right? Mina, I said imports, and why did I do that? Okay, anyway, let's continue, guys. So now they're saying that based on the estimated provided in the table, estimates provided in the table, first identify all leakages. So we've done that. And then now calculate the value of these leakages. And here they're saying that calculate the value of the injections. So because now you know what are leakages and what are injections, I think it's going to be easy to answer this question. Right. So for injections, you're just gonna write, okay, government expenditure is investment and export. Then you're going to say 300 plus 7,500,000 plus 500,000. Then you get your answer. Then for leakages, it's savings and um for leakages, it's savings and taxes. And then, okay, so I forgot to add this one on the injections. You're gonna add this one as well, guys. 9,800,000. 9,800,000. And then for your leakages, it's savings, which is 815,000 plus 4 million. Then you get your correct answer. Thank you guys for watching this video. I hope this is going to help you guys. Yeah, but household spending is an injection. Thank you guys. I wish you guys all the best on your preparation for the exams. You've got this. Don't doubt yourself.